My name is Todd Beck, and I'm a web seminar producer for ACAMS. Welcome to the ACAMS web seminar, Next Generation of Financial Crime Management. Today's event is sponsored by Fiserv. We're excited today to have Jeroen Dekker as our speaker. Jeroen is a senior product manager at Fiserv with global product management responsibility for the market-leading financial crime risk management platform. A key aspect of his role is monitoring and anticipating market trends and needs in order to bring next-generation AML and fraud detection capabilities to clients and the wider market. Jeroen is actively involved in understanding evolving regulatory and business requirements around financial crime risk management for financial institutions of different shapes and sizes, and then turning those into software functionality. He's regularly quoted in trade publications. He's a highly sought-after media spokesperson, and we're pleased to have him back again with us. It's also, as a side note, we're pulling him away from his 2-year-old son's birthday party. So we're especially pleased that he's here, and he's pleased it's not a webcam because he probably has little sticky handprints all over him with ice cream and cake and 2-year-old handprints. But Jeroen, we're very glad that you're able to get the time with us today, and I'll turn it over to you.
All right. Thank you, Todd, and thank you for that elaborate and very personal introduction. Indeed, it's my son's birthday, but I'm sure he'll forgive me or just not remember. So thank you all for joining me. This is actually my fourth time doing an ACAMS webinar. Previously, I've spoken to you about optimizing your transaction monitoring system, about the challenges of combining your AML and fraud technologies, and also about the notion of going beyond customer monitoring. So after submitting a topic for this one, my marketing colleagues decided to call this Next Generation Financial Crime Risk Management, which is rather ambitious, but I hope I live up to the title. So on that note, let's have a go. A little bit about the company I work for. We are one of the largest technology providers to the financial services industry in the world, and you'll find our solutions all over financial institutions, as this picture tries to represent, ranging from core banking systems and payment systems to mobile banking and analytics solutions. But my corner of the world, if you will, is our risk and compliance competence that you see circled there, which does several things, and one of them is financial crime risk management that I'll obviously talk about today. So this slide is supposed to show you that we're a big company, but I urge you to focus on the numbers on the right. The reason that's sort of important is that millions of accounts are managed on our systems, and billions of transactions flow through our systems. So the notions of integrity and security and thinking about financial crime risk management sort of come natural to our company, and we eat our own dog food as well, with several of our solutions being monitored by our software. About our software. So Here's where today's perspective on financial crime risk management comes from. We have a software platform that we've been developing for the past 10-15 years that has solutions for AML, sanctions, fraud, FATCA, and more. That's been around for a while, and we have many customers all over the world in different walks of the financial industry, small clients, large clients. And we've done a lot to further improve that into what we call next generation capabilities. So that's maybe where marketing's title for this webinar came from, which is not a sales pitch, by the way, but it's really about things we're seeing in our markets. The one I've underlined is sort of interesting for today, because we believe, as sort of the industry has believed for many years, that one of the big keys to successful financial crime risk management is to sort of take a holistic approach. And that's sort of been gospel for many, many years. But in the last few years, we've really seen that starting to really happen on various levels and in various ways. And I'll dive into some details on that today. Ultimately, I guess the summary for financial crime risk management is that it's an arms race. And you can take a pick of whether that's an arms race against the criminals, whether that's an arms race against the regulators who expect more and more from you, or whether through those categories it's ultimately an arms race against the other financial institutions, right? Because ultimately the goal is to make the criminals and the regulators pick on someone else. So that's sort of, I guess, the high-level message that we're bringing. And I thought this little cartoon here was a good way to display that. So, some of the trends we are seeing in the market today. This is sort of a summary slide. I have a lot more detail, but I'll run through them quickly. So, as most of you will feel every day, regulations change, new regulations emerge, and what's more important is that the expectations arising from those regulations are increasing. They are often found to be inconsistent or unexpected, that you're not really sure what next year's examination will bring. And enforcement is getting stronger, right? There are obviously record fines, and for example, in the UK, the FCA is coming down pretty hard on the British banking industry. So some of the stuff we're seeing is that regulators are moving into the fraud space. The main big example a few years ago was the FATCA and guidance for security in online banking. The European Central Bank came out with equivalent recommendations last year, or early this year. And so we're seeing them move into the fraud space. Second, tangential financial crimes that sort of used to live in the background a little bit have really come to the forefront, right? With enforcement of the FCPA, the UK Bribery Act being adopted, and obviously FATCA that I'll have some words on. The demise or the maturity or stability of AML has been greatly exaggerated, right? And a lot continues to happen in AML, if not in the regulations, then in the expectations that examiners come in with when they audit you. And finally, of course, there's been a lot of sanctions activity over the years, Arab Spring and all of that kind of stuff. So, is all of that done for a reason? Yes, because the criminals are getting more and more prolific. Needless to say, there's been an explosion in cybercrime in recent years. That's becoming more and more dangerous. And what we're finding is that the impact of fraud goes well beyond the direct financial losses, right? It's about the reputation, not per se of your institution at large, but of individual channels that you maybe bring to market to attract new customers, like your latest P2P mobile venture. If there's a fraud breach there, that can hurt the reputation of that channel and therefore lead to big financial consequences. As we sort of, as an industry, focus our attention to the whiz kids of cybercrime, we shouldn't forget that the folks who are into check fraud and card fraud, and calling consumers up to get their details haven't gone away, right? Existing fraud problems, loans, mortgages, internal fraud continues. And all of this becomes even more important because the media has really started to love all of this stuff, right? Whenever there's a bank scandal or a security or an integrity problem with an institution, a media frenzy ensues pretty quickly and spreads all over the internet. So it's important stuff. So making matters even more interesting is the bottom left there. One way to summarize that is that this World Wide Web thing is becoming really huge, but there's a lot more detail underneath that. And one of them is that most financial institutions have to innovate, right, in order to save costs, in order to compete against other financial institutions, in order to serve consumers better. They need to keep coming out with more and more services that are online and mobile and access everywhere. And because of that, financial crime teams keep being faced with new risks that they need to protect against, right? And how do you deal with that, right? Your job is never done. Okay, you keep buying new systems, which brings me to the bottom right category, and that is spending and consolidation on financial crime risk management technology, and that's obviously close to home for a vendor like ourselves. And I'm going to actually not go through the bullets here because I have a whole slide on it to walk through those trends in a bit more detail. So what we're seeing, starting in AML, is that as an industry, we aren't very happy with how effective and how efficient our AML operations are. Are we really finding all the bad guys? And how much effort is it taking us to find the few that we do find? So the need to be more effective is something we hear from the industry at large. Not quite honest to say that our own customers tell us this, but we also hear it from institutions that use other systems. And it's about finding the bad guys, being more effective at demonstrating compliance. What we mean by that is that you can answer any question that the examiner comes in with pretty quickly, and that you can do a better job of showing how you arrived at your risk assessments, at your decisions, at your thresholds, all of that stuff, right? They're coming closer and closer into diving into the nuts and bolts of your operations. And on a broader financial crime level, so outside of AML, more and more being effective is also about preventing fraud before it happens, right? Stop that first transaction instead of the second or the third or the fourth one when you've already lost thousands or millions of dollars. The other side of that coin is to be more efficient. What that means is that you spend less in order to get the same results or better results, and that has several dimensions to it. So one thing we're seeing is that institutions are looking to reduce the number of financial crime systems they have, whether that's disparate AML tools, whether that's different fraud tools for different channels or payment types, whether that's having a detection system somewhere and a case management system somewhere else, whether that's different onboarding, CDD systems. So they're looking to reduce their technology spend for various reasons, IT cost, vendor cost, just sheer operational efficiency. And then there's the never-ending topic of false positives, right? It's a never-ending quest to minimize those, and we continue to see institutions looking for that. Interestingly, we also continue to see institutions who basically accept what they implemented once upon a time and lament the false positives without actively thinking about ways to improve those. Like, yep, a lot of false positives, need to get a better system, and sometimes that's not necessarily true. And the final thing I'll call out about being more efficient is to reduce the number of investigation cycles. So one example of that is that you only want to investigate a customer once, even though different scenarios trigger different alerts for that strange large transaction that the customer did. So you want to streamline your investigation cycles by typically taking a customer-centric perspective. So on that technology level, after many years of talking and many years of being bogged down in the financial crisis, what we're seeing is that financial crime teams and maybe supersiding risk teams or technology teams are starting to get their heads above the water a little bit, and are able to take a real good look at their technology strategy going forward, right? Starting to make plans for getting rid of the inefficiencies and the ineffective approaches and get to sort of an end state to deal with the financial crime problem holistically, if you will. And part of that is to indeed arrive at a holistic view, right? That you understand a client's AML risk and FATCA status and MiFID status and fraud alerts. Saw an interesting example of that at a big client of ours a few months ago who showed their own internal system they had for really adopting a bank-wide view of their corporate clients, which was quite impressive. They'd come a long way, and that obviously applies and implies doing that for financial crime risk management as well. So what does that mean in practice? Well, quite often the discussion has been around AML teams and fraud teams joining forces. More and more we're seeing that's not necessarily true, and we've said that for quite some time, that a better way to think about it is to start on a data and a technology level, even if that data and that technology is still being leveraged by separate teams who decide on their own good time to what extent they want to work together and exchange information, and maybe at some point in the distant future join up. So that's sort of happening. The next one is obviously also kind of interesting to us as a vendor. What we're seeing is institutions becoming dissatisfied with their existing solutions to the point of going to the market and seeing if there's something better out there. And that has to do with again being effective and efficient, right? Do you catch the bad guys, and do you do so without too many false positives? But it's also just about more project stuff and operational stuff, about the cost and the success of implementation, the cost of upgrading if it's like a heavily customized solution and you have to pay a lot of money to upgrade. That becomes a real problem, right, for your operation, for your department budget, and that sort of stuff. And the flexibility of the solution to adapt, right, to continually reduce those false positives and implement new detection scenarios for your latest payment channel or whatnot, or your latest acquisition of another credit union. So it has to do about the success of implementations, the cost, the attitude that the vendor brings to the table. So we're really seeing a lot of movement in financial crime, but in AML in particular. And another aspect feeding that is regulators. They come in and have or build an opinion of systems and implementations, and then tell the financial institution to do a better job, quite frankly. And that in turn may cause the financial institution to look at the market again to see if there's something better out there. So when they do so, what do they look for across financial crime? And that is sort of the bottom trend that we see. And that is that they're looking for more depth in the solution and more breadth. And I'll spend considerable time today talking through that. Some of the key words are listed in the bullets below there. What we see and also what we believe ourselves is that more and more the power needs to be with you, financial crime specialists, fraud people, compliance people at the institution who aren't programmers, but, for example, know their way around an Excel spreadsheet, right? It takes intelligence, it takes skill, it takes some training, but in order to be effective in a rapidly changing environment with new fraud threats emerging in a matter of hours, you cannot be expected to rely on your vendor, right? Having to go back to your vendor, or relying on your own IT folks, having to put in a request with IT to make the one expert available who's working on your core banking upgrade or something. So more and more the power of making changes and doing new stuff in the system needs to be with you. So a couple of interesting trends between sort of the two biggest areas we sort of have in our ACAMS world is what we see is that the discipline of regulatory compliance and examination is moving to the fraud world, right? It's not moving away from AML, but it's invading the fraud world. What I mean by that is that traditionally in fraud, it didn't really matter how you did it as long as it worked. More and more, what is required is that you are able to demonstrate that you took adequate measures to protect your online banking against fraud, for example. So that means you need a sound compliance program, you need to document why you did it, show that you did it, have a second line of control. So all of the stuff that compliance teams do every day and think about every day needs to be available in the fraud space as well, right? So if you're a fraud team, you'd be wise to seek help from your compliance colleagues to implement your fraud programs that are dictated by regulations. Moving the other direction, though, is the use of things like advanced analytics, and what's driving that is political dissatisfaction with the effectiveness of our AML industry. And so more and more what we're seeing is that regulators are looking for the effect of your program over checking the boxes and showing that you have a sound policy. I guess finally the risk-based approach is really starting to happen, and that more and more they're going to come in and see that you did the right thing because it worked, and more they're expecting you to use advanced analytics to, for example, justify thresholds. So at an institution a couple of weeks ago that really was asked why they put a certain threshold at 15,000 instead of lower or higher, right? So they went through some pretty sophisticated analytics to arrive at a conclusion that yes, perhaps it's better at 13,783. So they were pretty close, but still the regulator or the examiner expected more and more justification. So some interesting trends, therefore. Some more detail on that sort of stuff. So these are the kind of advanced analytics that examiners have begun looking for, and through them institutions have begun looking for. So you can sort of divide them into two worlds. One of them is to sort of be used operationally as part of the system to detect stuff and to investigate stuff. And on top of that, you're seeing more and more analytics that are used to analyze the data, right? To analyze the results of your operations. How much did I find? How much did I not find? What did those things have in common? What can I learn from those things? And how can I feed those back into my detection models to make them better in the future? So I guess the message then is that we have to keep running as an industry and U.S. financial institutions. There doesn't appear to be an end in sight. The road is long. We are not sure what's ahead, but it is likely to be more challenging than where we are today. And the interesting thing about it is that there's no prize for coming in first. In fact, there's no finish line in sight. So there's no prize for coming in first, but you don't want to trail the pack either, right? The trick is to sort of run with the pack. And because of that, this is some other stuff that we're hearing desires for, and that we believe in ourselves as well. And that is that institutions are looking for ways to help each other in different ways, and through that help themselves. So one way of doing that is to arrive at sort of benchmarks against peer financial institutions to get some sense that you're kind of doing the same level of sophistication as institutions of a similar ilk. You have a desire to exchange information with each other just on strategies and best practices. On a more tangible level, you've expressed an interest in sharing actual detection scenarios, for example, right? Because this new fraud attack is happening, or this new AML area of attention has surfaced, and you want to share and maybe contribute, and through that receive best practice scenarios from other institutions, getting updates about news from the industry, sharing data on bad people. So there's a lot of ways in which institutions can work together, for which there obviously needs to be a centralized infrastructure to facilitate that. But this is sort of different than before, where especially your fraud efforts were seen as a competitive weapon, and it still may be. So there's always a balance there. But we see a lot of opportunity, and we're hearing a lot of demand for being able to collaborate between institutions. And I would argue that collaboration also needs to happen more and more between institutions and regulators, between countries. So there's so much more that we can do together as these criminals prey on the fact that we are bound by borders and by companies and by laws and by regulations and systems. They seamlessly move across all of that stuff, and that's what makes them so successful. So when you look across all these financial crimes, right? Fraud, AML, sanctions, tax evasion, corruption, bribery. What do these things have in common? Well, for one thing, so far it appears that locks on the door are not enough, right? When we had passwords, they broke them. When we moved to out-of-band or two-factor authentication, it was broken. When we moved to out-of-band two-factor, it got broken. Onboarding CDD, they come with a fake identity of a complex company structure internationally, and they become a client anyway. Well, let me say that when I read the news about the latest biometrics authentication methods, I saw one the other day that used a wristband to measure your heartbeat, and that would serve as authentication. Well, that becomes to me a little scary, in that thugs from some criminal enterprise have to get your heartbeat in order to steal your money. So. In all seriousness, what we see is that the notion of behavioral monitoring tends to be required across all these financial crimes, right? To ensure that the ones that get through those locks are still caught, and therefore it's about finding the bad apples. Whether a U.S. taxpayer qualifies as a bad apple remains to be seen, but obviously FATCA requires you to distinguish your American customers from all the other ones, and the same applies to fraud and money laundering and what have you. And it tends to revolve around customers and their transactional behavior, whether the crime is about stealing from the bank or its customers, or whether the crime is about stealing from society, right? Corruption, money laundering. The solutions tend to revolve around customers and their transactions. And on a technology level, of course, it's always about data. Right? Data. What data can you give systems like ours, and then what can we do with that? And the game is never over. In all of these financial crimes, with FATCA obviously just beginning, we see that the regulations and the crimes continue to evolve. And with regulators moving in on the fraud space, what they also have in common is that they need your programs against them need to pass future scrutiny. I think that so far we tend to sort of ignore that in the FATCA space. Institutions tend to be scrambling just to get something in place for the immediate requirements for new account classification come July 1st next year, now that Treasury has postponed the deadlines. Instead of already thinking about the fact that at some point in the future we should expect some form of examination to follow. So what happens across these financial crimes then is that institutions are adopting what's called a layered defense. People sometimes call it defense in depth, which I think is actually kind of wrong, or I didn't come up with that. I read a paper that said that. And I rightfully argued that actual defense in depth is predicated on exhausting the enemy and stretching their supply lines so that you can at some point strike back to defeat them. which is sort of different than what we as an industry do, which is more like an eternal siege against, anonymous hordes of bad people knocking on your gates. So anywho, a layered defense is probably a better way to talk about it, and this is one way to sort of represent that. And it starts at the top with people and process, which means a number of things. I'll go into some organizational aspects in a little bit, but it also involves things like education and training and how you're organized and what kind of procedures you have. And then, especially in the fraud world, you get to physical and digital security of your networks, your devices, your systems, maybe your locations, right? Who can access the server room where your data is stored, that kind of stuff. And then we get closer to home to our AML world, where you obviously have KYC during customer onboarding, and then someone becomes a customer, right? And then they start interacting with your institution. And then, especially in the fraud space, you have these authentication methods for people to access your channels. That's one, and then to initiate payments. And protecting those channels historically have been point solutions. Different detection silos. You may have a system to protect against card fraud, for example, or check fraud, right? And those either work well or they don't work so well, but they do one thing for one channel. So increasingly what we're seeing is to have sort of a holistic monitoring layer behind that to detect and prevent stuff across your institution, to be followed by an overall investigation and case management environment where people can review the alerts that come out, have different tools to investigate that stuff, collect evidence for future examination, and make final decisions that in the AML space obviously turn into reporting, and in the fraud space turn more into resolution, doing things like deciding how much money was lost and recovered and at risk, and deciding whether to call a customer or to freeze an account. And more on top of that, now that these things are in place, institutions are looking for a control and analytics layer to continually have insight into the effect of their operation, how they can improve, and then execute that improvement. So that's sort of a one way to represent a layered defense. A little bit more on the first one, people and process. What we see mature institutions adopting as a compliance best practice is to always have 3 lines of control for any of their compliance program. The first line is typically a decentralized one. That means that there are teams or systems or processes across their front lines, whether it has branches or different locations or countries or business units or your online channel, that are responsible for the first checks. It quite often boils down to. So those are the frontline systems that are the locks on the door, right, during onboarding or channel access. And behind that should sit what typically is you guys, a compliance team, a back office team that has a central function, central oversight. And one important function is to catch what falls through the cracks, to avoid a single point of failure, right? If the front line messes up or misses something or messes up on purpose, you are there to catch it. Then the third line tends to be your institution's internal audit function, who comes in to check everything and also kind of helps you think like an examiner, right? Yes, you say that it's true, but how do we know that it's true? Those sorts of questions. So one way that's really coming to light is in FATCA. I've had the privilege of spearheading our own FATCA efforts in financial crime risk management here at Fiserv, and what we're seeing, like I said earlier, is that everybody's scrambling around that lady that's sitting at the top there, and that is to get something in place for new accounts. And then next year, at some point, your requirements for pre-existing accounts will come into play. And then for both of those categories, you need to start doing ongoing monitoring for changes in circumstances. After all, people move, companies change ownership or location or structure. and then there are these payments that you need to watch over to see if withholding needs to be done for non-consenting accounts. So that, especially that top left one, tends to be a frontline process, a decentralized process, and what we're seeing is that behind that, what's currently a FATCA task force, at some point will turn into a standing FATCA back office team that will be responsible for central oversight, dealing with exceptions that will surely come, verifying that things have happened and things have led to correct outcomes, and also do things like approve cases that are sensitive or where the front line couldn't get to the right Chapter 4 classifications for a new entity account, those kinds of things. And so the idea is, in terms of tooling, that all of that data from those top boxes there flow down from your core systems, your maybe you have a dedicated CDD application, and be fed to that FATCA team to show the status for all of the clients, deal with exceptions, verify that the right decisions were made based on the data that's available elsewhere, to do all of that verification and monitoring. And for that, you then want to have a system to deal with those exceptions to ultimately arrive at the list of customers every year that you need to report to the IRS, or if you have a Model 1 IGA in place, your local proxy. So it's another example of having a monitoring function and having a second line of control, right? So again, you have your things at the front end, but there needs to be something behind there. So what do we mean by monitoring? Well, what we mean by monitoring from a system perspective is that a system is able to record behavior all the time, to learn behavior of customers, but also of other things, people, places, things like devices, employees, branches, countries, banks, what have you. Learn behavior of all of those things so that you can detect anomalies, right? And once you detect anomalies, you're able to investigate those things and resolve them, especially, of course, if they represent financial crime risk. So that's sort of what we mean by monitoring, right? This end-to-end process of not just recording the behavior and learning, but trying to catch the bad apples and dealing with that whole process. So that sort of technology obviously is becoming more and more sophisticated over the years. Another arms race, if not for you, then perhaps for us vendors amongst ourselves. So some of the questions we've been hearing and some of the questions you may want to consider are these. For example, how flexible is a system in terms of the data you can feed it, right? All of your institutions are unique. All of you have different systems, different kinds of customers, products that maybe have different characteristics and properties that are relevant for you for a certain cross-section of a type of crime, a type of channel, a customer segment, a country that you operate in. So how flexible is it to deal with your data and bring that data to life in your system and hook up to your systems, especially in the fraud world, if you have a real-time fraud prevention need, how easily can you integrate? So then the next part is something that I touched on a little bit. Are you able to look at behavior from different angles? I'll take an example from the fraud space. We tend to think about anomalies from an account or customer perspective, but if someone initiates a payment through your online banking system, you can also look at that person's device, for example, and ask questions about the behavior of that device. For example, has that device been used to access the accounts of more than 3 other customers in your institution? Does that be awfully strange? I don't know about you, but I don't have a lot of random people using my laptop here to access online banking, right? So by being able to monitor different kinds of entities and learn the behavior from that perspective, you're able to ask better questions and uncover different things across different financial crimes. Of course, the secret sauce within these engines are statistics and mathematics and fuzzy logic. So how powerful are they? What kind of equations and what kind of models can you employ to judge current behavior for this month, right? The last 30 days, aggregate cash behavior. Can you judge that by a long-term average for a month or by the same month last year, right? Maybe it's December and everybody does a lot of cash in December. So can you make those kinds of judgments with your systems? If you have real-time needs, does it allow for different kinds of strategies? Depending on the channel, maybe blocking or allowing is your only recourse. But more and more in online and mobile worlds, maybe you also have an opportunity to challenge payments if you detect an additional risk, so that you don't have to block it and sometimes get it wrong for your false positives, but you can let the consumer and the system deal with the false positives. How configurable is the system to drive your department's workload, right? How do you determine priority? Are all alerts for a given detection scenario created equal, or can you give alerts for a lot of money more priority than alerts for less money, even though both have broken the same threshold, for example? A particular sort of practical thing that we hear from our market over the years is, all right, so a transaction is flagged for fraud, and yes, it turns out to be fraud. Well, but that transaction was already made part of a customer's profile, so can you undo that? Which is not just important for fraudulent transactions, but also for erroneous transactions. People fat finger transactions like teller windows, and so a transaction is entered as $1 million instead of $1,000. Can you undo that sort of thing, or are your profiles corrupted from there on in? Is the system able to, for example, and this is especially important in the fraud world, trigger additional actions, right? So in real time, a payment comes in, and you are able to stop that payment by responding in real time because it's fraud. But chances are that other things are at risk as well. For example, it's the fourth payment in 10 minutes, right? Well, chances are then the first three were also fraudulent. Are other accounts at risk? Do you need to block the accounts? Do you need to kill the IP address from accessing your bank again? Do you need to call a customer straight away? So can you do that effectively from your financial crime platform? Are you able to learn from past results, right? Either automatically or as an analyst decision, can you look at someone's behavior and say, yep, our threshold is set at 50,000, but we now understand that this business has grown, and so 100,000 is normal behavior for a monthly basis for this client. So let's set the threshold for that client to 100,000 from here on in, and obviously justify that decision for future scrutiny. And finally, on a project and operational sort of IT level, we see institutions looking for ways to move their configurations along, right? Deploy it to different business units, more easily deploy it from a testing stage to a production stage, or more easily move it along when they're upgrading to a vendor's latest release. And this is a particularly sore area for many institutions we've spoken to in recent times. That they're facing a situation where they sort of have to pay for customized code all over again in order to get that onto a new release. And finally, as I preached a little bit earlier, is a system designed to empower business users, right? Can your perhaps a little geeky guy in your department, right, who knows his way around a software tool, can he whip up new detection scenarios or adjust existing ones himself, or is it real programming skills that are required to make any changes that force you to go back to your IT department or even to a vendor? So these, we believe, are some of the keys to what we call, or what marketing calls, I guess, next generation financial crime risk management. These are sort of the qualities that we see institutions looking for in recent times in order to become, I guess the trifecta that I've been using is to become more effective, more efficient, and more adaptive to keep rolling with the punches that regulations and criminals and technologies keep bringing to you, to your good night's sleep. So another aspect that we're seeing is the notion of defense in breadth, right? This holistic view. And there's many dimensions to that. One of them is across financial crimes. Criminals don't care if they're in the act of committing fraud or in the subsequent act of committing money laundering, whether they're paying a bribe to someone or using that bribe to evade sanctions. It's all one big illegal soup, so dealing with them separately is neither very effective nor very efficient. Similarly, you want to be able to work across different customer segments or products that you have, and if you have a diversified financial institution, again, to be more efficient in particular, but also to have a holistic view of customer relationships. And a third dimension there is channels and payments. And the notion of cross-channel has obviously been beaten to death, and the beauty of most AML systems is that they sort of inherently have been cross-channel from the get-go in that respect, and that's why they're a good candidate to be a holistic platform for other types of financial crime, and particularly fraud. And finally, if you work in a larger institution, taking a defense in breadth approach also applies to do that across countries and businesses. And after this, I'll have some examples. I probably need to speed up a little, or I'm going to run out of time for answering questions. So here are some examples, some real-world examples of customers that I've personally run into in recent months. Some of them are customers, some of them are not customers or not yet customers, whatever the case may be, but they're real examples of folks I've spoken to. So the first one is a large U.S. bank who has been a customer of ours, and they're really now working to consolidate to a true enterprise financial crime approach. What that means is that they plan to leverage the same data, the same platform for their anti-money laundering operation, for sanction screening, to deal with the alerts that come in from their card fraud system, and to do ACH and wire fraud detection. So sort of a forward-looking project and strategy that they've decided on a board level, like, all right, what's our long-term plan here? And this is it. Similarly, a large institution, a global institution, in fact, based in Western Europe, that have had an AML platform for a number of years that they've used across all of their countries, but they've all been sort of independent installations, and now they're working to consolidate all of that into a truly holistic view of each client across those 40 countries. While they're at it, they're thinking, because it's a big technology initiative, we may as well consider that same platform for screening and fraud. Over to the UK, it was also quite interesting, where I learned when talking to those folks that they've set up a project team to really take a long, hard look and make an inventory, because it's a big bank with a lot of units and teams and systems and departments, and especially a lot of fraud tools that have sort of been bought over the years, and really start defining a long-term financial crime technology strategy, right? They have too many tools, it's not effective, it's not efficient, they don't have an holistic view, so how are they going to resolve that in the future, right? So they did what they had to do for a few years, now they're taking a longer-term perspective. An example in the insurance industry of a phenomenon I mentioned early on in this presentation is that they have had a quote-unquote brand name market-leading AML system deployed for many years, and quite frankly, it wasn't performing, so they're looking to replace that. right? So it sort of shows that until recently, you could sort of get by with showing the system that you had, or talk about that you had something in progress and that you were working to improve, and the examiners didn't really dive too deep. Apparently, that's changing, right? To the extent that they're willing to sort of go back to the market and buy another system because the quote-unquote brand name system wasn't performing. Similar situation with the bank in the Middle East. Another dimension of that there is that they had separate tools for AML and for sanction screening. Unhappy with both, so they're now looking at the market and want to see if they can find a single solution instead of two. Over in South America, it's really a global picture that I'm painting here, and they are sort of, in an emerging market, not very mature yet. So they're sort of getting a true AML system for the first time, but they are already anticipating FATCA needs while their government is taking its time to consider whether they want an IGA or not. So they're already planning to use that same platform for FATCA. And finally, a recent example of a bank in the Asia Pacific region. We received what's called a request for a proposal, and it covered 18 different fraud channels. Right? They want a single solution to really cross the entire spectrum of their bank and offer protection for all of these different banking and payments channels that they have. Interesting example, I think, of why it's so powerful to take this holistic approach, and that is the idea of leveraging data across different financial crimes. So take online fraud. One particular tool that banks use there is to do something called IP geolocation. There are specialized vendors for that sort of stuff to sort of determine what country, or even more granular, an IP address is from, which is useful to detect and prevent online banking fraud. Now, knowing the geolocation of an IP address is quite useful for other walks of financial crime as well. For example, you have a business customer who indicated that they're a local business, or they're an exporting business to Germany. If you then find that payments on a business account are initiated from a IP address that's in Russia, and that happens consistently, maybe it's time to ask some questions about that business. Similarly, for sanctions, there was a recent webinar by some other organization that talked about giveaways that an IP address is from Iran, and that may be a clue to evading sanctions. And over in FATCA, if you've established someone as a local resident, why is he doing all of his online banking from the US for most of the year, right? In which case you may want to reassess their FATCA status. I have 5 more minutes, I see. Quick case study of another real example, and that's a large insurance company. I guess the story is that they also have adopted a real holistic approach to financial crime risk management, get all of their policies and all of their payments for all of their clients under one roof to have a holistic view. So after their AML and sanctions and fraud implementations, they're now also deploying that same platform to do FATCA control and monitoring. So it's really happening. So are we advocating throwing everything away that you have and replacing it all? No. That's what this picture tries to represent. There are many different flavors. If something doesn't work, sure, replace it. If you have nothing, use the platform. If it works but only a little bit, use it to take out some false positives. If it only solves part of the puzzle, do something more to protect. And I have an example later on. So apologies for having to rush through the last bit. So the one I want to focus on is online banking, right? Most of you maybe have tools in-house to focus on online access, to prevent, to look at click behavior, IP addresses, device reputation, that sort of thing. Increasingly, we're seeing institutions look for something behind that, right? To also look at transactional behavior, to also look at cross-channel behavior, to be that next layer of protection behind those point solutions. So with that, we feel that taking these sorts of approaches, right, going broad, going deep, ensuring that technology is flexible and sophisticated. It all sounds easy enough, but hopefully I gave you a number of pointers in the kinds of things you need to look for. Has a bunch of benefits, and there's that trifecta of being effective and efficient and adaptive that I mentioned earlier. So with that, I'm going to take a 1 second breath and then look at a whole bunch of questions that have come to me via the chat box. So I'm going to cherry pick a little bit and read them very quickly. Medical cannabis business, I think I'll skip that one for now. I'll be sure to answer all of your questions personally if I can, if ACAMS will allow me. I'll get back to you each for any questions that I cannot answer now. We see more and more that regulators and or other authorities in some of our jurisdictions almost expect us to identify fraud through money laundering detection systems. Yep, that's quite true. Serious fraud has been a predicate offense to money laundering in many jurisdictions. The act of fraud is almost followed by definition by the subsequent act of laundering that money. And many fraud problems are real problems for society, just like money laundering, right? Remember the mortgage-based crisis that we had. So yep, that's one more example of these domains coming together, right, on various fronts, both from a regulatory perspective and a solution perspective. Do you see AML monitoring typically being done real time, or is it okay to aggregate transactions within a week or even a month for monitoring purposes to detect trends and patterns? So typically it's well, in our world at least, it is still a batch process, right? The vast majority of our clients over the years have implemented sort of overnight batch processing, whereby the system looks at yesterday's transactions to judge behavior and aggregate stuff and generate alerts. More and more we hear wishes to detect in real time, not because you are required to prevent anything. Latvia notwithstanding, by the way, that's an interesting AML law over there that allows you to actually block transactions if you suspect money laundering. But because if you detect in real time, you can reach out to a branch or relationship manager straight away while the trail is still hot, so to speak. So that you are better able to understand that behavior before people's memories fade, etc. So it may be more efficient and effective to detect in real time, even if you go through your weekly, monthly processing of making SAR decisions afterwards. With that, I'm afraid I've run out of time to answer, well, the many other questions that I see over here. It's 7 p.m. over here in Holland. I have to get back to my boy's birthday, I guess. So with that, I thank you a lot for your attention. I hope it was useful, and I'll turn it back to Todd.
Thank you, Jeroen. And I especially appreciate your willingness to answer those questions. We have the ability to link the questions that were asked to the email addresses of those who asked them. So we'll share those with you. ACAMS also benefits from those questions in that we use those to guide conference speakers and blog posts and articles, all kinds of things. So we appreciate everybody's participation today. If you have additional questions for Jeroen, or if you have suggestions for future web seminars, we hope you'll email those to the address you see on the screen. It's training@acams.org.